This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Not much green. The Dow tumbles 200 points as investors find little to get excited about.
Ouch, Alcoa. Earnings season starts on a sour note, dashing some hope that the profit recession is coming to an end.
Lasting damage from the Pinto to Tylenol. We've seen some big recalls before, but is this one different for Samsung? Those stories and more tonight on Nightly Business Report for Tuesday, October 11th.
Good evening, everyone, and welcome. It was one of those days on Wall Street. Oil fell, rates rose, the dollar climbed, healthcare, which had been a market leader, retreated, and the earnings reporting season got off to a lousy start. Taken together, it was a recipe for a down day, and that is exactly what we got. The major indexes all falling 1% or more. The Dow Jones Industrial Average off 200 points to 18,128. The Nasdaq declined 81, and the S&P 500 was off 26.
A shadow was cast over the broader market when Alcoa reported weaker than expected results to kick off earnings season. The stock fell 11%, its worst day in more than 7 years. And this was the last report for Alcoa before it splits into two. Morgan Brennan dives deeper into the metal company's results.
While Alcoa reported higher quarterly profits, revenue slipped as the commodity business continued to face pricing headwinds. But the higher performing value-added segments that supply the aerospace and automotive industries also came under pressure.
We have to admit that we are seeing in some of the markets some near-term challenges. On the aerospace side, I mean, we're seeing that there's huge demand there. And there are teething problems on the engine side particularly, and some destocking on the aero structures.
This morning's report is Alcoa's last as a single company. On November 1st, the 128-year-old metals giant will split into two, a mining and smelting operation that will keep the Alcoa name, and Arconic, which will claim the more profitable value-added businesses that supply manufacturers with aluminum and titanium alloys. Analysts say while earnings weren't that big of a miss, it's the results in those Arconic segments concerning investors the most today, since 2016 revenue targets were lowered for all three, thanks to challenges in aerospace and weakness in commercial transportation.
If you think about what we traditionally think of Alcoa with commodities and alumina and aluminum, you know, the deficit outlook that Alcoa put out there actually assumes that there could be a little pricing support in those markets. The real problem, as you pointed out, was on Arconic, and that's where, again, the aerospace businesses, which is where most of the value resides in the split. So if there's going to be a little softness there and you have new industrial investors coming to the name, they're going to be a little concerned as what that 2017 outlook looks like.
Seaport Global's Josh Sullivan has a neutral rating on the stock. But as earnings season gets underway, Alcoa's results set the stage for a potentially bumpy ride for many of the industrial giants it supplies, including United Technologies, which already warned that its engine production target for Pratt & Whitney won't get met. And Honeywell, which reports on Friday, also warned of lower sales, due largely to weakness in business jet engines. For Nightly Business Report, I'm Morgan Brennan.
Many had hoped this would be the quarter that saw the end of the so-called profit recession. Bob Pisani takes a look now at whether that's likely to happen.
Earnings season is upon us, and there's a lot at stake. This is the quarter we're supposed to kill the earnings recession, supposed to reverse 5 straight quarters of earnings decline. And we're supposed to do it because top-line growth, revenues, are improving. Revenues are expected to increase 2.5%. That would be the first increase in revenues in the last 6 quarters, and the fourth quarter is supposed to be even better. But several big names have warned that full-year earnings will not be as strong as expected, including Honeywell and Dover. And today, Alcoa said revenues in its growing aerospace and automotive division will not be as strong as expected in the fourth quarter. Low global growth is definitely a problem, but it's not clear it will derail earnings improvement. That's because several sectors are expected to increase earnings. So, for example, tech stocks are strong because of strong demand for chips and cell phones and other personal devices. Healthcare is expected to do well because earnings for drug stocks and HMOs are stronger. Financials are also expected to do better, particularly in the fourth quarter, as interest rates have been rising. And finally, even energy companies are also finally expected to do better in the fourth quarter with oil over $50. You put it all together, analysts are still fairly optimistic. We'll see if that optimism is justified as we get more guidance. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Christine Short joins us now to talk more about what to expect this earnings season. She's an earnings expert and senior vice president at Estimize. It's nice to have you here, Christine. Welcome back.
Thank you. Great to be here.
Let's start, first of all, with what kind of it's not starting out well, certainly, but what kind of a season are you expecting?
You know, I think the overall theme for the third quarter's earnings season is more of the same. Expect to see the same low but steady growth rates that you've seen during the first half of the year. Also expect to see some of the same concerns crop up this quarter. So slowing global growth, strengthening dollar, issues with energy prices. All of these themes are going to resurface again when we start to get more of these earnings press releases coming out here in the next few weeks. But overall, I think the bright spot, and Bob Pisani just mentioned this in his piece, is the fact that revenue growth is set to come back. So after 6 consecutive quarters of S&P 500 sales growth on the decline, we are expecting 2.5% growth to return. And yes, bottom line growth is still under pressure. We're expecting about -1% for earnings growth. However, we've actually seen that improve just over the last week as more companies have reported. So it's potentially that number is going to get better as we get more of these earnings reports.
Obviously, the different sectors will perform differently. Who are the likely winners going to be in this new sort of sector world where there is an 11th sector called real estate, or REITs, basically?
Well, it's not going to be the REITs. It's not going to be the real estate sector, but it is nice to see that broken out. And it's not going to be the financials either, which is where the REITs were formerly integrated with. It's going to be two of the same sectors that we've really seen strength for over the last, I'd say, 6 quarters, and that's healthcare and consumer discretionary. The difference is it's not for the same reasons that we've seen for the last several quarters. And what I mean by that is healthcare, for instance, has been driven by the biotechnology names really for the last year and a half. This quarter, biotech is actually the laggard within that sector. They're expecting only about 4% earnings growth. It's really going to be driven by the healthcare providers and pharma. And when you look at why that is, well, we have a larger insured population thanks to the Affordable Care Act. We also have an aging U.S. population. So those are two of the big reasons that you're seeing those names come to the forefront now. And within consumer discretionary, autos had a great run. Ford is really killing that in the third quarter because they are expecting year-over-year declines. So I'd be looking at the internet retailers, auto components, as well as household durables.
On that note, Christine, thank you.
Thank you very much.
Christine Short has been our guest tonight with Estimize.
The decline today in the price of oil may have also played a role in the broader stock market decline. Domestic crude was off more than 1%, but it did stay above $50 a barrel. And that may be because of skepticism around a possible deal to cut production. In other words, that little slide there today. Steve Sedgwick reports tonight from a major meeting of oil exporters in Istanbul.
Another fascinating day at the World Energy Congress in Istanbul, Turkey on Tuesday. A whole host of contributions sending the oil price one way and then the other as well. First of all, I was speaking to the Secretary General of OPEC, who said to me that actually any skepticism about a deal coming from Algiers to cut production from within OPEC is misplaced, and that all members of OPEC, all 14 members, were on board. Listening to what he had to say about the all-important contribution from Iran.
After meeting with Minister Bijan Zangane, as well as the President of Iran, President Hassan Rouhani, who have both assured me that at the end of the day, despite the fact that every member country of OPEC, as expected, is there to protect its national sovereign right, but Iran will join in a consensus to re-establish market balance on a sustainable basis.
That was Mohammed Barkindo, the Secretary General of OPEC, just confirming to me that all members of OPEC, all 14, are on board for potential cuts leading up to the all-important OPEC meeting in November in Vienna. But there is skepticism on this deal, and that's been sending markets easier on the oil price on Tuesday. We saw skepticism from the likes of Goldman Sachs, who said that actually they didn't believe that Saudi could push through cuts across all members of the group. And skepticism perhaps as well from the likes of Igor Sechin. Now, he's a very important man He's the boss of Rosneft in Russia. Russia, of course, the world's biggest oil producer. He represents Rosneft, which is 40% of that country's production, and he said his company would not be taking part in any production cuts. And of course, that's a very important contribution, especially given the fact that Mr. Putin, the president, has said that Russia would potentially freeze and may even get involved in cutting price action, of course, which would lead to a non-OPEC and OPEC agreement. So a lot of interesting headlines coming out from the major players here at the World Energy Congress in Istanbul. For Nightly Business Report, I'm Steve Sedgwick.
Still ahead, are consumers thinking twice before buying a Samsung product? Samsung is halting production of its Galaxy Note 7 smartphone after reports the device and its replacement device caught fire. This follows safety warnings from both the Consumer Product Safety Commission and the Federal Aviation Administration about the use of that smartphone. But is all of this making consumers have second thoughts about buying a Samsung product? We took our cameras out to find out.
It doesn't discredit the brand at all.
Okay.
Things happen.
I'm not going to switch from Samsung to any other device. Samsung is the best.
I just actually ordered the new Pixel. You know, just having too many issues with Samsung. I can't risk it.
I think this could be a serious marketing problem for them. I mean, especially the more publicity it gets.
Some Samsung consumers are sticking by the brand. Others are not. But will the botched recall of the company's exploding flagship phone have any long-lasting impact on the company? Let's turn to Bill George, former CEO of Medtronic and now a professor of management at the Harvard Business School, to discuss whether he thinks the company can recover. You know, Bill, I heard an interesting comment today from a Dartmouth Business School professor who said that perhaps the culture at Samsung, it being a South Korean company, very deliberate, they like to study before they move, slowed down their response to this, which seemed very slow.
Well, Tyler, I think they have just committed the cardinal sin for placing one defective product with another defective product. I mean, come on. They have not gotten to the root cause of the problem, so they took a very superficial solution and didn't really fix the problem and just replaced one with another. And I don't think consumers are going to forgive them very soon. I'm not sure it's the culture is so slow. It's an engineering culture. It's a quality culture. They've done really well until this. But I think what it is, Tyler, is they're out of touch with the U.S. market. It's run entirely by people from Korea. Do they have enough Americans in Korea that really understand what this means to U.S. consumers? 300 million people. They've been extremely successful here, and they're risking their entire franchise. I have a huge big box TV from Samsung. Are people going to start to question whether they want other Samsung products? I think they're risking a great deal by inaction. I have not seen a CEO of Samsung from Korea on the U.S. Airways, on your show, or flying over here to apologize and get engaged and talk to the folks in Washington about this crisis. And they're in a huge crisis that's putting the entire Samsung brand at risk.
You've given us a couple of points that you think, Bill, Samsung needs to do. One, make sure no one uses the Note 7 and consumers get 100% refunds, but also strengthen the internal quality controls.
Well, obviously you need to do that. And they started blaming on their supplier, but by the way, is a Samsung subsidiary that makes the batteries. They don't have internal quality control. They're not testing. Actually, when Lowell McAdam of Verizon said that he's not seen a recall like this in a very, very long time. He's a very conservative man. For him to speak out at a major conference says, and they do their own testing at Verizon, but why should they have to? Samsung's got to ensure us of the quality of that product coming in. How would you feel next if somebody on a plane next to you has a Samsung Note 7 and they're using it and it could catch on fire? I mean, it wouldn't make you feel very good. So,
no, it certainly calls into question. But you're concerned that not just their cell phone business is at risk here, but that Americans' acceptance of their other products. I have Samsung televisions. You ask people about the TVs, most people say the Samsung is the best. I have Samsung appliances. You say the whole portfolio could be at risk.
You have one brand name, and when you tarnish that brand name, you can tarnish it across the board. I worry about this in Medtronic. When I was there, one product that is a recall, if you don't handle that well and the CEO doesn't jump in and get personally on the line and apologize to people who have been harmed and do the right thing, Tyler, and, you know, we've seen CEOs do that, and we've seen them that fail, but I think it could hurt their entire franchise. They have a great franchise, by the way. It's a great company, but I'm not sure they know how to handle the consumer in the United States when they have a crisis like
Very
that.
interesting how much emphasis we have to leave it there, Bill, but how much emphasis you put on the personal involvement of the CEO. And we remember Mr. Burke at J&J who did just that and successfully in the Tylenol case. Bill, thanks.
Exactly.
Bill
Thanks,
George
Tyler.
with Harvard Business School, former Medtronic CEO.
And Samsung is also having its day in court. The smartphone maker and Apple squared off at the Supreme Court. The issue? Patents and how much Samsung should pay Apple after jurors found Samsung infringed a patented iPhone design. Hampton Pearson reports.
Samsung has been ordered to pay all the profits it earned from 11 older smartphone models for illegally copying patented designs from Apple's iPhone. $399 million so far, a judgment it wants the Supreme Court to overturn. An 1887 law requires patent infringers to pay total profit. Apple believes the law is on their side.
The legislative history shows Congress wanted, above all else, to deter copyists and knockoff artists by requiring them to disgorge what Congress called the total profit from the article of manufacture that is sold.
It's the first time in more than 120 years the High Court has taken up a product design lawsuit, with a majority of the justices willing to consider limits on profits tied to specific components, a potential win for Samsung.
We think the court gave a very careful and serious hearing to Samsung's argument that a rule that gives all the profits on a product for a design patent on a narrow portion of the appearance of the product is bad for business, devalues the other patents in the product, and is bad for consumers.
A high court ruling expected next spring could have ripple effects across high tech. Justices must balance protection for lucrative design patents while not stifling innovation, as smartphones become almost indispensable worldwide, generating enormous profits for their manufacturers. Even if Samsung gets a win from the High Court in the dispute over patent profits from previous products, it pales in comparison to Samsung's current problems with this generation of smartphones. For Nightly Business Report, I'm Hampton Pearson at the Supreme Court.
Yum Brands unveils plans to expand its business worldwide, and that is where we begin tonight's market focus. The fast food operator said the spinoff of its China division later this month will allow the company to add more restaurants around the world, with a goal to increase franchise ownership to 98% by 2018. The owner of the restaurants KFC and Taco Bell also said it expects to return up to $13.5 billion to shareholders by 2019. Shares of Yum Brands up nearly 1% on this otherwise soggy day. They finished at 88.25. St. Jude Medical says it will recall some of its implanted defibrillators because their batteries could run out early and cause the device to stop working. The battery depletion issue affects about 400,000 devices and has been linked to 2 deaths. St. Jude is currently in the process of being taken over by Abbott Laboratories in a $25 billion deal. The news sent shares down 3.5% to 78.41.
Rent-A-Center said third quarter profit will fall below estimates, while same-store sales are also expected to be down. The furniture and appliance rental company said an unsuccessful transition to a new sales operating system impacted its results. They punished the shares today. They fell nearly 29% to $9.18. LPL Financial may be considering a potential sale. Reuters says the broker-dealer is in talks with Goldman Sachs regarding a sales process that has garnered interest from other companies and private equity firms. Shares popped nearly 7% to 33.01.
Some of the biggest names in the internet sector are at the Internet Association's annual conference in Silicon Valley. And there's one topic in particular that's top of mind for industry execs. Julia Boorstin is in Menlo Park, California.
With less than a month to go before the election, the executives representing the 40 companies in the Internet Association are talking about which candidate would be better for their business. The CEO of the organization saying Hillary Clinton is clearly better for the Internet industry.
I think certainly the platform that Hillary Clinton has put out is a lot more comprehensive and speaks to our issues in a very thoughtful way. We have not seen that from the Trump campaign.
Verizon CEO Lowell McAdam agreed that a Clinton presidency would offer more stability for internet giants.
I think the way most business leaders think about this at this point is Secretary Clinton will be more of a continuous of the last 8 years. And it's hard to know what a Trump presidency would look like at this point. So, I've had many friends say that they're trying to take steps to keep their business from being impacted by an election of Donald Trump, because it could be very unpredictable.
McAdam says he sees the uncertainty of this intense political cycle slowing down decision-making of other businesses as they wait to see what happens. Taking a harsher tone, IAC and Expedia chairman Barry Diller, a Hillary Clinton supporter, saying the fact that Donald Trump won the nomination is a, quote, evil miracle.
This is the thing that just astounds me, is the idea that that clown, bad clown, could actually be president of the United States. It's so insulting to all of us. So, yes, she will win.
Pandora CEO Tim Westergren wouldn't weigh in on the two campaigns, but he did say that the heated contest is drawing a surge in ad dollars to his platform.
So we see a lot of this firsthand, and we're talking about not just presidential advertising, but all the way down ticket to local, county, and supervisor elections. So we see it on the platform.
The internet is clearly playing a role in this election that it never has before, with millions of people streaming the debates online. We'll have to see how that impacts turnout next month. For Nightly Business Report, I'm Julia Boorstin in Menlo Park, California.
Coming up, what small business thinks of a key talking point on the campaign trail: wages.
Hedge fund billionaire Leon Cooperman defended himself against SEC charges of insider trading. As we reported, the SEC alleges Cooperman and his hedge fund made trades in a company called Atlas Pipeline with non-public information. Today, in an interview, Cooperman called those charges unjustified.
Omega and I have always followed the law. Anyone who has done their homework would understand that Omega was built on doing detailed fundamental research and complying with the law. We could have settled with the SEC for an amount that is far less than I donate to charity on an annual basis, but I refuse to do so because I know that we acted appropriately and lawfully.
Cooperman also said the amount of money the government is wasting prosecuting his firm is shocking.
Small business confidence dipped in September. This according to the National Federation of Independent Business. Entrepreneurs are unlikely to hire employees, in part because of the presidential campaign. It is so divisive that the top issues for business owners are not being addressed. And as Kate Rogers reports, one of those issues is wages.
Small business owners like Sherry Woobin are grappling with the idea of higher wages. Woobin owns St. Joseph Equipment in La Crosse, Wisconsin, and pays workers well above minimum wage at between $14 and $15 an hour. But a hike in the federal minimum wage, which has been stagnant at $7.25 an hour since 2009, would pressure her to increase pay even more to remain competitive.
Living here in western Wisconsin and in the Midwest, our cost of living is much lower. Housing is lower, education is lower, gas is lower, childcare is lower, education, all these things are lower. So we're not on par with the different coasts that we have both on the west and the east. We are middle America, and anything that you do on the west coast and try to bring here to the Midwest, we have to scale up.
It's not just the wages. The cost of health care has increased each year, she says, nearly 30% in 2015 and 11% this year. A wage hike on top of the burden she's facing under the Affordable Care Act would be damaging.
It greatly increases our cost of doing business.
In Boulder, Colorado, Judy Amabile is hoping for wage increases at both the federal level and in her own state, which is one of 4 nationally voting on ballot initiatives to increase the minimum wage to $12 and beyond. Amabile's Product Architects, Inc. instated a higher pay several years ago and found it was good for business.
We found that all of a sudden people could get their car fixed when it broke down. They could get to work better. They could get daycare when their kid was sick. So we had employees who were a lot more productive, and our turnover pretty much disappeared.
Right now, 29 states and Washington, D.C. have wages above the federal floor of $7.25 an hour, and momentum has steadily built for an increase in the years to come. Major cities from New York to Los Angeles and Seattle have taken matters into their own hands in the face of a stagnant federal wage, hiking local pay to $15 an hour over the course of several years. One thing is for sure, businesses should be bracing for higher wages. Both major party candidates have spoken out in support of higher pay. Democratic nominee Hillary Clinton favors $12 an hour at the federal level and higher in states and cities where $15 an hour is feasible. Meanwhile, Republican nominee Donald Trump has said he supports a $10 an hour federal wage. What happens post-election remains to be seen. For Nightly Business Report, I'm Kate Rogers.
And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching.
And thanks from me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we'll see you back here tomorrow night.